If you're waiting for mortgage rates and wondering, when do we finally get any kind of good news? Well, today might be one of those rare days. So let's break down what just happened in the mortgage market and why this actually matters to you as a home buyer or currently a homeowner. Well, this morning, new inflation data came out specifically called the CPI, or Consumer Price Index. In simple terms, CPI measures how fast prices are rising across the economy. And today's report showed inflation is cooling faster than expected. And that's important because when inflation cools, mortgage rates usually follow. And that's why data matters. And here's the key numbers. Inflation was expected to come in higher, but instead it came in lower than forecasted. That immediately caused investors to move money into mortgage-backed securities, which is exactly what helps mortgage rates improve. And we saw that happening within minutes of this report released. Now, what does that mean for mortgage rates and you as home buyers? Well, when mortgage-backed securities go up in value, lenders can offer a better price to you. Translation, today brought real estate improvement, not just hype, and not just headlines, actual pricing improvements. Now, this doesn't mean rates are suddenly low, but it does mean that the pressure of pushing rates higher has eased today. We also look at treasury rates, especially the 10-year treasury, because they tend to move with mortgage rates. And the 10-year dropped again today, which tells us that bond market agrees. Inflation looks like it's slowing. And when both short-term and long-term rates fall together, that's a strong signal that the market is gaining confidence. There's also some policy discussions happening right now, including comments from Donald Trump that increase support for mortgage-backed securities. Regardless of politics, the takeaway is simple. More support for the mortgage market generally helps stabilize rates. So the big question that I'm getting today is, should I lock my rate in or should I float it? And the short answer is, we finally have some positive momentum, but rates are still sensitive to the upcoming economic data. This is where strategy matters. Every borrower situation is different. Timing matters more than the headlines. Now, the moment you've been waiting for, the mortgage truth. Today was a legit win for the mortgage market. Cooling inflation and falling bond yields plus mortgage stability equals a better condition for homebuyers and homeowners that we've seen recently. It doesn't mean the job is done, but it seems that the direction is finally making some sense. So if you're thinking of buying or refinancing, or just want to understand these market moves and what they mean for you, reach out. I'm more than happy to break this stuff down every day so that you don't have to decode Wall Street to make smart decisions. This is the mortgage truth, not hype, just real talk. And I'm Mark Jones with I Think Mortgage, powered by Premier Mortgage Resource, your mortgage expert. When you think home, I think mortgage.